To be able to find a job, especially during this pandemic, I believe this is really both God's favor and human favor. I remember it was February 2020 that I also attended a two-time interview. One is the initial, I think it's third time. I mean, one is the initial and then with the HR manager, and then the last one was with finality because I am going to be assigned at the project site. Yet after a few days, there is a lockdown, so it became like they have forgotten my application, so they didn't call me. A year later, it was also February 2021 that I also received a call, and this is because of human favor from an important person telling that there is available position for me, and I grabbed the opportunity to be interviewed. And last March 2021, I officially joined. Although the nature of the job is so different, I used to be communicating, I used to be doing business development, I used to be doing interviews also, and I used to be doing things with regards to office management. But the nature of the job that I am currently at is entirely different because I am going to deal with numbers. Maybe some of you are afraid of doing numbers or calculating numbers. And for me, actually, I do have inclination with numbers. It's also one of my favorite subject in school, and I can calculate, of course, but the numbers that I am telling you is more on accounting. So, although I also had an experience about bookkeeping, about posting, I admit that I am limited in knowledge. That is why I need to expand my horizon in terms of the nature of the job that I am currently having. So join me today as I'm going to explore about accounts expense or expense accounts, because I'll be exploring more on these matters, things with regards to costing. So in this series, this is only one of the series that I'm going to be sharing with you based on my research. Let us specifically discuss about expense accounts. So please join me in exploring this knowledge. In today's episode, our reference is from accountingverse.com with regards to expense accounts. Expenses refers to cost incurred in conducting business because there are travel expenses, there are salaries, depreciation costs, and other expenses. Technically, expenses are decreases in economic benefits because of the factors that we have stated, like salaries, especially during the accounting period for a specific year, in the form of decreases in assets or increase in liabilities that result in decreases in equity other than those relating to distributions to equity participants. From the long definition above, we can therefore draw the following points, namely, number one, decrease in benefits during the accounting period. Decrease in benefits during the accounting period. Expenses are measured from period to period, and of course, it will result in a decrease in economic benefits. So, from a certain period of time, expenses are being measured. Number two, decrease in assets. You can see the arrow that is going down, or increase in liabilities that may affect the entire financial standing of the company. The decrease in economic benefits, let's discuss this in detail, could be in the form of a decrease in a particular assets or an increase in the liabilities of a certain company for a certain period of time. When a company incurs an expense, it uses or it pays cash. Thereby, the cash that has been dispersed decreases the entire assets of the company. Well, besides cash, the company may opt or may also use other assets in paying the expenses. It may also incur in a liability in cases of accrued expenses. When we say accrued expenses, these are unpaid expenses by the company. Number three, decrease in equity other than distributions to equity participants. Equity, take note of the word. There are only two elements with regards to the decrease in the equity of a particular company. Number one, distributions to owners. For example, withdrawals of the equity or distribution of dividends and expenses. Take note of the two elements, distribution to owners and expenses. Let's come now to the exciting part, list of expense accounts. Number one, cost of sales. This is also known as cost of goods being sold, and it represents the value of the items which is being sold to customers before putting any markup. In a merchandising companies, when it comes to the cost of sales is normally the purchase price of the goods that is being sold to a certain customer. That includes incidental cost. So this means that by definition it has insurance involved. However, in manufacturing businesses, take note of this. It is the total production cost. The total production cost of the units sold to a certain customer. Service companies, however, do not have cost of sales. So we have mentioned merchandising, manufacturing, and service company. Let's have a review about cost of sales again. This is also known as the cost of goods that is being sold, so COGS, which represents the direct cost related to manufacturing or purchasing of a particular good that is being sold to a certain customer. Companies use this measurement, of course, to calculate their gross margin, or we call it markup. In construction companies, they're allowed to put 15% markup. In addition to the cost of sales, we have purchases, which is the cost of merchandise acquired that are to be sold in the normal course of doing business. So we do have issued like purchase requisition that is meant to purchase goods or services. At the end of the accounting period, this account is closed to cost of sales. That is purchases. Freight in, because there is freight out and right now we have freight in. Of course, if the business is shouldering the cost of transporting the goods it purchased from one point to the other, such cost is recorded as freight in. During the entire accounting period, this account is also closed to be cost of sales. So that's the account title at the end of the entire accounting period. Number 2, advertising expense such as commercials and print ads. This refers to cost of promoting the business, such as those incurred in newspaper or publications or printing, television, radio broadcasts, billboards, flyers, and etc. These items we call advertising expense. Number 3, bank service charge refers to the cost charged by banks, of course, for the utilization or use of their banking services. We call these expense bank service charges. Number 4, delivery expense. This represents cost of gas, oil, courier fees, and other costs incurred by the business, most particularly in transporting the goods sold to the customer. Delivery expense is also known as freight out. Delivery expense. Number 5 is depreciation expense. These are the cost of the depreciated assets. Refers to the portion of the cost of fixed assets like property, the plant and equipment used for the operations of the period reported during the accounting period as it is being measured. Number 6, insurance expense. Insurance expense refers to insurance premiums paid or payable to an insurance company who accepts to guarantee the business against losses from a specific event. Part of the cost is the accidental cost, so we need to cover it with insurance. Number 7, interest expense. This involves the cost of borrowing money from the financial institution such as bank. Number 8, rent expense. So if you are renting, these are the expenses or cost paid or to be paid to a lessor. So we call the owner of the property lessor for the right to use a commercial property. Since you are located in a commercial hub such as an office space, of course, if you require a storeroom, a building, or etc., it depends upon your requirement, and there are property finder these days, real estate broker these days. Number 9, repairs and maintenance refers to cost of repairing and servicing certain assets of the company, such as building facilities if you do own a building facility, machinery if you are in a construction company, and equipment. Repairs and maintenance. Examples, the cars, the vehicles. Number 10, representation expense. Entertainment, cost for customers, the employees, and of course the owners of the company. It is often coupled with traveling for business purposes. Hence, the account title is referred to during the entire accounting period, travel and Representation expense. Salaries expense. We are waiting each and every month. We are paying compensation to employees, of course, for their services rendered to the company. They are entitled to such payment. Number 12, supplies expense. This refers to cost of supplies. Ball pens, ink, paper, spare parts, etc. used by the business, by the employees, just to run the business. Specific accounts may be in place, such as office supplies equipment or expense, store supplies expense, and service supplies expense. Thank you guys for watching. I hope you like it. Please do